5 investing principles to make money in this bear market. Urgent. Investing demands commitment and effort, much like preparing for a marathon. Discipline, long-term thinking, and weighing the risks and benefits for each steps. People invest according to guidelines that have proven effective over many years. Consequently, I'll be outlining the 5 investing rules in this video. Rule number 1. The wealthy idea is to discourage you from your investing. Most people believe that the more effort you put in, the more money you will have. However, everyone at this age ought to be aware that you need to put in the effort, but as the saying goes, there is a season for everything. Sometimes you have to step outside of your comfort zone to become a successful investor. Investment efforts, such as those that produce more returns, the market as a whole demands virtually perfect timing. Even with a thorough knowledge of the market, timeliness, knowledge of the stock market, the most accurate technical indicators, and intuition are necessary. Your attempts to time the market are the most costly education in trading. Making sporadic automatic contributions to the market could prove costly. This can be ineffective because every transaction carries a cost, even when you'll eventually be required to pay regulatory fees rather than commission. The more active you are, the higher the expense ratio of your investing portfolio will be. Of course, it's crucial to monitor your investments and take active trading and portfolio balance are very important. Another concern that typically agitates investors is how to address under diversification of investments in today's portfolio. Portfolio could lead to enormous short-term losses that could get worse over time. However, a portfolio with too many stocks makes it tough to recover from downturn. Track every investment you make, selecting good investments and diversify, very important. This guideline is not an excuse to be lazy, as I'll explain in this video. Putting the big picture aside, you think about using the 5% rule in each component of your investment plan. You should invest no more than 1% of your overall investing funds in any one asset. And just 5% of your overall investment budget should be used for one investment. Involved in any kind of high-risk investments, despite what it essentially means. However, on a global scale, diversity is about not placing too much in one portfolio. Trading is a wise decision. Rule number 2. Play the long game in the current market. Understandably, action has many people anxious about their financial future. Nevertheless, if you're a long-term investor, the minute-by-minute fluctuation should not concern you. Unlike short-term investments, long-term investments are gained through growth over a long period. What then should be done in an unstable situation? In an unstable environment, stay the course and play the long game armed with dependable investment strategy. Knowing you're headed in the right direction allows you to meet your objectives. I'll demonstrate the benefits of using the long game in investments. Please keep watching this video to see what happens when quality investing is done properly. It is better because it eliminates the need to amass a number of subpar investments than to own a few shares in properly chosen businesses that will benefit you create wealth over time, as opposed to stocking your portfolio with riskier investments. Of course, you must invest in reliable and successful businesses to succeed. Long-term gains typically come from investing in high-quality indicators equities. For example, endure less volatility and pay off across several years. Let's imagine that AF Enterprises has a portfolio investments that only consists of 20 to 25 stocks. Provided those 20 to 25 stocks are properly assessed and meet these strict requirements and are priced affordably, the potential long-term gains are endless. But you must identify what makes certain firms has a competitive advantage over others. This might be their pattern of growth, substantial financial reserves, or other things you can rely on even though these assesseds, whenever the rest of the market inevitably declines, can be challenging to remain steadfast amid a market downturn, but you can count on a method of investing centered on minimizing risk and increasing rewards. You'll be able to sleep better at night knowing that in the long run moving forward, transient volatility won't make or break your financial destiny. Given that long-term investing is a very profitable technique. When an investor reinvests their profits, they are advancing the interest. The earlier you invest, the longer the term, the more growth the capital can support the investment, the more your assets and ultimately your fortune will grow and expand over time. Rule number 3, for a big sum of money, is to take advantage of market volatility. Even for seasoned investors, volatility is a serious issue, and I suspect that it is possibly giving some of the newbies among us heartburn. First things first, in order to comprehend volatility and make use of it, you must make an early commitment to figuring out how to handle current market volatility. And it's not always a boogeyman beneath the bedstand. It's preferable to come to terms with the whoops and whirls than to live in continual terror. If nothing else, it will help you sleep more soundly at night. How you handle volatility greatly relies on the type of trade you're doing. A credit spread seller will adjust more readily than a swing trader will, therefore. What works for one type of trader may not work for a long-term investor. The beauty of volatility is how soon what was little may not work for someone. So you should adjust your expectations on what is usual. Unless you want to be startled every day by how heightened volatility operates. Due to the increase in two-sided action, both to the downside and the upside, the gains. If you're worried, it might be because what you have today might not be there tomorrow. Losing out on potential revenues if the swing goes farther in the future, then scale out, or receive a portion of the earnings, then if the market abruptly turns around. Rule number 4, you'll have at least secured part of the hard-won gains. Analyze your investment performance on a regular basis to see how well your investments are performing. When evaluating how investments are performing, you should consider a variety of evaluation of performance. The actions will rely on the knowledge that most worries you, as well as the types of investments you make. For example, if you already own the stock you want to sell soon for a profit, your main concern will presumably be whether or not the market price is increasing, has peaked, or is beginning to decline. But if you're an investor, if you're interested in buy and hold assets, you'll be more worried about stock price. In 10 or 25 years, you'll probably be more interested whether it has a history of increasing earnings and appears to be in a good position. Alternatively, a cautious investor may be looking to expand now. Someone who is close to retiring will be mostly concerned with the income yield. You might wish to consider evaluating the interest rate your assets can offer. Certificates that are being paid in respect to the present market by the bonds or deposits. Additionally, you should look at the yield on the mutual funds and stocks you buy. Obviously, for the money they generate, if market rates are falling you may be displeased with your investing prospects when the value of your current bonds increases additionally. You can be enticed to purchase securities on the market with a lower rating, anticipating that you could possibly receive a larger return. For illustration, you want to employ a performance metric that evaluates the risk you take. To achieve your goals, it is crucial that you act as a wise investor regularly. Assessing the success of your investments. Learn more about investment. According to rule number 5, if you want to be wealthy, you must invest daily if you want to amass enormous money, and the first. Knowing about investing is the most crucial investment you can make. The truth is that by sending your money to work, you can make a lot more money more quickly. Instead of merely sending yourself to work every day, allow your investment to work for you every day instead. You're interested in learning about investing, but you're not sure where to start. It is understandable that there is a misconception that learning about investing is. Knowing that investing is a difficult task puts you at an advantage because if achieving your future goals is one of your top priorities, watching this video is ideal. Previous to putting your money into an investment, you should investigate. I personally begin my research into the stock market with a reliable book. If I'm looking to learn anything new, I will trust a reliable author. You may build a strong foundation to stand on by reading books about the fundamentals. If you want to comprehend the basic ideas behind the stock market, you can start learning about investing with a book to give you thorough guidance. There are some fantastic books on stock market investments. Make sure you do your research before choosing a book, and be sure to request advice from family and friends, as well as reading. Customer testimonials are a good resource for learning more about potential investments. The advantages of selecting an investor training is that you can go at your own pace and devote the necessary time to an excellent investing course which might assist you in understanding what you are being taught. Make a plan to achieve your investing goals after identifying them. A different choice is exactly as it sounds. A stock market simulator is a program that replicates the stock exchange. Basically, it's a simulation game that allows you to practice investing. You can practice with a stock market simulator. Numerous stock simulators are available online that you can use without risking any money. You can occasionally download investment apps to your smartphone. Even if they go by the names paper money trading apps, or something akin, they all perform. Likewise, I would strongly advise knowing the fundamentals of the stock market. I tried one of these simulators years ago before starting to invest. Consequently, I was absolutely perplexed because I didn't fully grasp the fundamentals. Once you master the fundamentals of sound investing, self-education will help you a lot. If you're interested in learning more advanced techniques, forums can assist you. Take part in forums, interact with other investors when you can study about their tactics, and if you have any questions, ask, but make sure to do your research first. It appears like an excellent way to make sure you're joining a good forum with good information. Like YouTube, this upcoming video will change your financial situation. See if they are accurate by watching Life Forever. Thanks for watching.